Hey everyone, Griffin here, and as we approach the end of 2023, it's the perfect time to discuss the exciting annual news for Canadian stock market investors over the age of 18. As with the new year right around the corner, your tax-free savings account, or TFSA for short, is set to receive its highest ever annual contribution limit increase, except for 2015. But this gives you more opportunities to grow your investment portfolio without incurring taxes along the way. And in my yearly tradition here, I like to provide an update on the TFSA's contribution limit, where this serves as a refresher on how the TFSA operates as one of Canada's best registered investment accounts and how you can strategically utilize it to build your investment portfolio tax-free. And by the way, if you are a new immigrant to Canada, I'd highly recommend you check out this video right here that I've made on the very topic that covers everything A to Z that you need to know about your personal finances and investing when arriving in Canada. But let's now get into the TFSA. Alright, so the TFSA, short for tax-free savings account, is a Canadian registered investment account under the regulation of the Canadian government. And its primary advantage lies in the fact that any dividend income, any interest income, and just overall growth of your portfolio accumulates completely tax-free over the years that you're investing. Now, this is in contrast to conventional investment accounts that are potentially subject to annual taxation on dividend and interest income, along with being subject to capital gains tax upon selling positions for a profit down the line. However, this tax-free benefit does come with a few conditions, notably that your contributions are made with after-tax income, and there's a cap on the amount you can contribute each year to the TFSA, where the federal government sets this contribution limit, as they call it, on an annual basis, which is typically hovered around $6,000 annually, as we can see from this chart, illustrating the contribution limits from the account's inception back in 2009. For example, last year's contribution room was set at $6,500 and new for 2024, due to the severe inflation that we've experienced over the past year, the contribution limit is set at $7,000, which happens to be the highest limit since 2015 when the limit was set at $10,000. And just in case you're curious here, contribution limits are adjusted for inflation in $500 increments, which is why there are often periods of stagnation in the growth of contribution room, as we can see from this table. But again, considering current inflation trends, 2024's contribution room has been set at $7,000. And make sure to subscribe to my channel so that you're updated on future TFSA contribution limits. Now let's dive into how these contribution limits apply to you based on your age and unique circumstances. Alright, so before calculating your total cumulative 2024 contribution room, let's clarify some key points about the TFSA. First off, your contribution room, it accumulates from the year that you turn 18 or the year that you arrive in and become a resident of Canada. For instance, if you're currently 40 years old and you've never used any of your TFSA's contribution room, well, your cumulative contribution room moving into 2024 would be a total of $95,000. That's quite a bit of room to catch up on that can grow to millions of dollars tax-free over the course of your investment journey if done correctly. That being said, contribution room only accumulates in years where you do hold resident status in Canada with a valid SIN, regardless of your age. So if you became a resident in, say, 2022, you're 40 years old, well, your contribution room would start from 2022, not back in 2009 when the account was created. So in this instance, for example, you would have 2022, 23, and 24's contribution room totaling $19,500. Okay, let's now cover specific scenarios that viewers like you might relate to. First scenario here, let's say you're turning 18 in 2024. Well, your contribution room will be $7,000 total, and then every year from now on, you will have access to the new year's contribution room. Example 2, say you turned 18 years old in 2015 and you've never contributed to your TFSA. Well, your cumulative contribution room in 2024 will be $64,000. Scenario 3, if you're a new immigrant aged 30, let's say, with Canadian resident status as of only 2020, you would have a cumulative contribution room of $31,500 in 2024. And finally, say you move between Canada and another foreign country, well, you only accumulate contribution room for the years where you are a resident in Canada, meaning years where you spend over 6 months in Canada as opposed to abroad, where for those years you will not have access to those years' contribution limits. So hopefully these examples give you a better idea of how you can go about determining what your total cumulative TFSA contribution room will be in 2024 based on your unique situation. And for even more accurate information, you can simply check your My CRA account online to see what room you have left based on previous contributions. Lastly, let's explore how to leverage your TFSA for successful investment and growth of wealth over time. So while the TFSA offers tax-free gains, it's still crucial to balance potential gains with the risks associated with each position you're buying within the TFSA. Because unlike with regular investment accounts, TFSA losses cannot be used for tax deduction, which is known as tax loss harvesting. Additionally, losing money on investments within a TFSA and then proceeding with withdrawing that loss from your TFSA can lead to a reduction in total contribution room moving forward. To illustrate, imagine you invested $6,000 at the age of 18, which later drops to $3,000, and you then choose to sell the position and then withdraw it. Well, you permanently lose $3,000 in contribution room because next year, even if you have a new $7,000 contribution room available, you're not able to recontribute the $3,000 that you lost on your position. So that's absolutely something to keep in mind, but it also works in the opposite manner. If you invested $6,000, which later climbs to $10,000, and then choose to sell and withdraw that investment, well, not only is the $10,000 withdrawal totally tax-free, but the next calendar year, you're allowed to recontribute up to $10,000 plus any new contribution room. The point being though that while aiming for high returns in a TFSA is of course understandable, it's also essential to assess risk relative to your investments, where for sustained tax-free growth, consider utilizing broad market exchange traded funds such as an S&P 500 fund, as they provide diversified exposure to many positions and dividends that compound over time. I'm sure this isn't the first time that you've seen an example like this, but imagine starting with only $7,000 in 2024, contributing annually and at an 8% growth rate over 30 years. Well, even without considering dividend reinvestment or increased contribution limits over the years, your portfolio could very well reach over $860,000 over that 30-year period. By the way, if you're interested in learning more about utilizing the TFSA based on your investor profile and risk tolerance, I'd highly recommend you look into my completely free stock market investing mastery course over on Skillshare, which has over 1,500 students and covers 7 hours worth of valuable stock market investment content to get you familiar and up to speed with managing your own investment portfolio. Additionally, check out Questrade and Wealthsimple Trade, links in this video's description, to open your own TFSA, and you'll get free money for signing up. Finally, don't forget to subscribe to the channel, as I'll be releasing a handful of TFSA related videos over the coming weeks that you won't want to miss. Thanks for watching, and I'll see you in the next one.